back to another episode of Paris and Baz Cast, where
Hi,
we
guys.
discuss topics that impact property management, sales, and finance, the three services that we provide. And today is all about yet another interest rate
We've
rise.
been hearing all about it for the last year.
We have, and for the last, so this is the 12th increase.
Yeah.
I'm sure a lot of you have heard a lot of commentary and updates on what's happened, how it is the highest in 12 years or since 2012, so 11 years ago.
Mm-hmm. Yeah.
And it's affecting a lot of people. But today is really about hearing you, our audience, give us your feedback of how is this affecting you. Whether you are a landlord or you've got an owner-occupier property, how is this affecting you? I mean, the kinds of things that we are hearing is the fact that a lot of people, a proportion of the population during the time when the rates were low, had saved a lot of their, put the money away. Exactly.
But what we're starting to hear now is with the latest rate rise today, and if there's going to be more in the future, these are going to hurt now.
Yeah.
I
Is
think
this the tipping point?
The people are at a breaking point now. So it'll be interesting to see over the next couple of months. As we know in real estate, there's a shortage of stock at the moment on the market, which is holding up prices, driving up prices actually for the last couple of months. So, but I see if there's another 2 or 3 rate rises, I think there could be more stock coming on in the market in the next couple of months, which could mean more buys, good buys out there for buyers. So now is the time to get prepared with your finances. Obviously, I think it's a good time now to refinance. There's a number of offers on the table available prior to 30 June with the cashbacks. Yeah,
and we will talk about that as well, about what's happening. The 30th of June, end of financial year. Every year is a big deal, but this year there's a few things that are changing, and we'll talk about that in more detail. But, from the information that I've been hearing in the news, on the radio, on the articles, it is sort of sounding like, there's about 30% of the Australian population, the ones that have a mortgage, are actually, seem to be affecting the inflation. Like, I mean, it's their job to fix inflation, which is not going to happen. I mean, the majority, because there is a lot of purchases and a lot of increase.
And with the fixed rates, a third of the fixed rates loan, they're due to expire in the next couple of months as well. Yeah. So a lot of people that are fixed at the moment, they're not feeling the pain until they roll off in the next couple of months. That's when it's going to be interesting to see. Yeah. What I've noticed is people are holding on to property, which they potentially probably have to sell, but they're not selling at the moment. Yeah. They're saying they're trying to ride out the wave. Yeah. But if there's going to be a couple more rate rises, look, nobody really knows when the rates are going to start decreasing. Yes. They were saying,
by the end of
this year.
But
now they're saying early next year. I'm also hearing middle of next year. Yeah. So it's will be interesting to see what happens in the near future.
Yeah, and it is all being driven by inflation which is out of everyone's
That's the question
control.
that have been asked today. Is it really curbing inflation?
That's the thing.
Obviously, there's a lag factor with the rate rises. It takes a couple of months before it kicks in. Are they increasing the rates too quickly, too soon? It's wait to be seen.
But the inflation is 2.5 times pretty much more than the ideal range of 2 to 3%. So that's why there is this drastic action being taken, which is not in anyone's favor. But again, as I mentioned, I'd love to hear, like, are you one of those lucky ones that did the right thing and, squirreling away money just to keep it up in your offset accounts?
Surplus money in the redraw, offset, obviously with buffers in your savings account will definitely help. Yeah. But how long can you ride the wave?
Can that go?
With obviously cost of living going through the roof as well. Yeah. It's tough times ahead at the moment. So good time to check your finances, get in touch, and see if we can put you on a better deal.
Absolutely. So let's talk about the cash rate. The cashbacks that are changing. I've heard. So not every bank?
Yeah, so a couple of the banks have obviously pulled it back. There are banks out there that haven't called the end date yet when they're going to expire, but I'm only assuming they will be also scrapping that pretty soon. Yeah. But get in now. Let's see. It's not all about refinancing as well. We can also sharpen the rate with your existing lender, see what lender you're with, just to make sure every dollar counts right now.
Absolutely. So are there any banks that have declared that definitely by 30th of June?
Definitely.
Which ones are those?
On a CBA, for example, they've already scrapped it. from 31st of May.
Yeah.
No further cashback.
Okay, so CB has already finished.
Westpac are saying 30th of June as well. They scrapped it, and same with NAB as well.
Okay.
So look, yeah. So we can do a review of your homeland, see if you're looking at taking that equity, looking to buy property. Not this year, next year. If you want to have equity ready, available to go, when the market does soften, you're ready to pounce. Obviously, if you got finance pre-approval, I think that's what counts. When the market is slowing up.
Absolutely.
And also with the property prices going great at the moment, it's probably a good time to get your property valued. Have a good valuation.
That's right. And one of the yes, we will talk about the first home buyer, any schemes. Okay, yeah, we'll touch on that. But in terms of the sorry, I lost my train of thought. What were you finishing off with?
So with the cashbacks.
The cashbacks. I think I'll have to come back. I've lost my train of thought. So look, there are the key is to take action now. And before the 30th of June, with all these changes that are coming up, to see where you would be better off in terms of loans and refinancing and unlocking equity. Yes, coming back to, I just recall what I was going to say is if you are curious, and obviously this at the beginning, it is just a conversation, a starter and a report based on what else is selling in the area. We're happy to send you a regular update with what your property is worth. So it is basically, I'm happy to share a link.
And also on the back of that, every bank values the property differently as well.
Yeah.
So depending on which bank you're with, so sometimes you get a lower valuation with a particular bank.
Yeah.
Another bank can give you a high valuation, which basically enables you to rip out more equity to buy another property, debt consolidation, number of factors depending on your financial situation.
That's right. So if you are curious to know what your property is worth in today's market and you want to hear from us every, say, 12 months with an update, and then do get in touch with us. We're more than happy to send you that report. It's a link, you download, it's interactive, and you'll be able to see from there. So answering a couple of questions. So first home buyers, any schemes? Look, there are a number of schemes depending on what your scenario is. There is, for example, for single parents, and they're allowing more people to be able to buy a property. It is capped at 10,000, first 10,000 applicants. However, let's touch more on the stamp duty changes that are about to come into play from the 1st of July. So up until the 30th of June, and based on the Liberal government's initiative, you could opt into a basically a first home buyer's choice, which he gave you the choice of an annual tax or a upfront stamp duty for first home buyers only. So up until the 30th of June, you still can do that. You can still pay on an annual basis your land tax as opposed to stamp duty. But come the 1st of July, as a first home buyer, the tax-free threshold, so stamp duty-free threshold, currently is $650. It will go up to 800,000. So up to 800,000, you will pay no stamp duty.
Yeah, and there's a concession between 800
to a million.
To a million.
Exactly. So I have got a table which I'm happy to share. I don't know if it's going to come through correctly. No, probably not really. But say currently, based on what's current the stamp duty versus the new stamp duty from 1st of July, anyone purchasing up to 800,000 is really saving 31,000 in stamp duty. So there's your opportunity there. If you are buying in the new financial year, up to 800,000, you pay no stamp duty. 800,000 to a million, you pay reduced rate, which is a cascading scale, which we'll be happy to share that with you. Can a first home buyer use super? No. Super purchase, any purchase through your super is
for
investment purposes only, not for yourself to live in. Yes, you will live in it in the end of when you do retire and you wish to use that property, but not during the time and not for a first home purchase.
Definitely not.
Any other
questions? We can buy a property through your super fund, so investment properties. So we do SMSF lending. Yeah. So do get in touch. Obviously, you got to have a sizable super fund balance.
What exactly is that?
Depending on the lender, minimum 2 to 250k in your super fund. we can talk through that. Obviously, we need a financial advisor to work through it just to make sure it's the best strategy for you. But SMSF lending, we do. So if you've got balance in your super and you're looking at buying property or you're thinking about it, get in touch as well.
So investment property through your super, money coming in, money going out, no net effect in your current daily
day-to-day. So it's basically done outside your personal. It's just your co-contributions from your employer plus the rental.
Yeah. So and it's a completely different mortgage platform as well. A product as well.
A little bit more technical, but
so that is something that we can help you with. Now the third thing that is being zoned out. So remember in 2020 when we got it was called the temporary full expensing. So the instant asset write-off. This is more an accountant's field. I'm not going to go into too much detail, but I had a chat with a good friend of ours who is an accountant, who was mentioning how busy they are because the instant asset write-off up to 150,000 you could depreciate straight away. That is being phased out. So it's being replaced with up to 20,000 from next financial year. So there is a push for a lot of businesses to purchase capital equipment up to 150,000 for an instant asset write-off. So that will also be interesting for the month of June, how that affects inflation.
Correct. So inflation not getting curbed. So.
Exactly. So the inflation is going to be as high as it is for quite some time. So we've got to brace ourselves for more changes in the future. I did do a short video explaining the changes that are coming up with the Reserve Bank. There's going to be 2 boards, so do feel free to go to our post about that. So come 2024, July, there's actually going to be a number of changes in the way that the monetary policy is being handled in terms of the cash rate, how often they're meeting, what their requirements are. They're adding a few more people on the board to make the final decision and determination before these announcements are made, and there's more interaction with the public as well. So definitely watch that. I've just summarized it in a quick a minute and a half video, so worth watching.
So it's all happening.
It is all happening. And have we missed anything? What else did we?
I think this, just repeating, I think it's a great time to review the finances. Now's the time. There's not much stock on the market. Be ready. If you're a buyer,
be ready.
Looking to buy. I think if you're going to be ready, cash is going to be king over the next couple of months. Especially if there's going to be more rate rises.
Absolutely.
With more potentially stock in the market, but let's see.
Let's see where we end up. So do get in touch with us if there is any other questions, and thanks to the viewer that asked us the question about the stamp duty so we could explain that in more detail. I hope that answers it for you. If you have any more questions, do feel free to send us a message. More than happy to cover it more in depth in our next episode as well. Anything else happening in mortgages, rentals, sales that we could
I think the toughest thing right now in mortgages, I think, is just the servicing. Obviously, with the rate rises, a number of clients that have got loans over the last couple of years, they just can't service on the current calculator with the buffers in place. I think it's just a little bit painful. But which means, look, we can still sharpen the rate with the existing bank. It's not all about refinancing. We've got to ask the question. And if we ask the question, we'll get it.
There you go. Perfect. Thank you very much. We'll see you guys next week with another update, and love to hear from you in between then about if there's any other feedback that you have. Thank you. We'll see you guys next time.
See you guys.